world of the stock market and real estate and finance and the state of the world. What's going on in the world? Let's see. NASDAQ is on the largest bull win rate. It hasn't had a down day officially since 2004. The S&P 500 has broken records without having down days. So that's crazy wild, out of this world, like 2.5 weeks straight. 2 Mondays ago, the NASDAQ QQQ hit 420 at open, $420 a share. It's now at like 485. That's a 13% index run in 2 weeks. That's a 300% annualized growth rate for the last 2 weeks on the entire NASDAQ. A crazy rally. So the world is extremely confused. It was a very weird world where there's so much fear. We just had a revised jobs report in the U.S. down like 900,000 jobs, and the market still rallied like 0.5% today. It's like bad news is good news, and good news is good news. No matter what, everything's good news. Everything's fine. Nothing's manipulated. Crazy world. They're pricing in rate cuts. Typically, rate cuts lead to recessions, like are indicators of recessions. And usually, after the first rate hike, the first rate cuts, rather, you have prices falling in the stocks. So September probably isn't going to be good, but the market's rallying anyway, which is super weird. What else? I find it interesting that the sentiment here in Ontario in the real estate market is so bearish. People are so afraid, and rates are falling. We're at like we have 5-year fix at 4.5% right now. You can get a 5-year fix, a 4-year fix, like 4.39, 4.49, 5-year, 4-year fixed. If you're willing to fix them for 3 years or more, the market is pricing in rates are back to 3%. So that's interesting that the rates have fallen, and yet real estate takes time, which is sort of expected. It takes time for a recovery, and I don't know what's going to happen with real estate, but yeah, it's been wild. We closed. Oh, I haven't shared since last Wednesday. We closed on the big hotel project with the 10 acres of land development, 26 units with the restaurant, full service hotel resort. We closed on that one in just half hour. It's in St. Mary's, half hour from London, Ontario. That's a cool project. We may be taking on investors for that because it has 200 unit zoning. So there's a potential to build another 200 units on it and have like a $40-50 million valuation when it's all said and done. So that one's interesting, I think, because there's just so much lift on it. And the land is worth like almost $750,000 an acre. So 10 acres is $7.5 million just in land on this deal. But we came with a beautiful 1998 built hotel on it as well, first full service hotel and bar and restaurant. That closed. We had another one that closed in Bayfield, just between Bayfield and Grand Bend. We had an apartment, a little resort that we picked up. That was a cool little project we picked up. It's 9 units. So that was a cool little project too. So 26 units and 9 units, and picked up a duplex, picked up another duplex. We just picked up a mansion actually that is technically closed, I think now. I don't know if it is officially closed yet. I think it is. We picked up a mansion in West Palm Beach we're going to flip as well. So that'll be interesting. It'd be the biggest single family flip I've ever done in my entire life. And it's got a $5 million USD ARV. So that'll be exciting to see if we get the $4 to $5 million ARV on it and get a nice big lift on that, hopefully, pending all the costs to get it there. But numbers are looking good on paper. So that's what's going on in my world and in my life. I've been busy with just so much going on. And so I'll be driving down to Florida probably maybe tomorrow or the day after to get down there and get that project moving, get a kickoff. We're hiring more people. We're trying to hire for construction. We're always hiring for management and things like that too. So lots of moving parts and busyness in the business. This preamble here is just like my weekly journaling where I'm documenting what's going on. Yesterday I was building a fence and I walked into a tree. It was a bleeder and I cut myself here and here. Right across there. It really hurt. So if you're wondering what that is, that's me looking down and trying to do that, guys. I'll put it on D&D here. Hang on. Here we go. There. I put it on D&D so that if any calls come through on this beautiful live stream, that they go to silent. Okay, so the questions starting to come in here. I'll happy to answer any questions that come in and share what's been going on in my life as well. Dominic says, how's it going? Love what you do. Question for you. Do you make your money map that grows up? How do you make your money map the growth? I don't know what that is. The next part of the question was your net worth, or you track it like in detail. Thank you. So Dominic, I think what you're trying to say is like, how do you track your net worth over time? I definitely do that. I have to do net worth statements for lenders whenever I'm applying for mortgages, and that gives me usually when I'm there, I'll do like a net worth statement for the lenders, and then I'll do one like I have a little Excel sheet where I track things changing over time. So what I mean by that is like a projected net worth. So I guess that's the word, is like we're here and there's like different alternate timelines to the future of my life in terms of like net worth. And so I'll map out like, if these projects all go the way I think they will, here's where my net worth will be. If they don't go as well, here's what they'll be. If they go like crappy, and if they go really bad, here's how the net worth will change. So I do that at least quarterly, or at least annually, but I try to do it quarterly. So I'd say I at least do that once a year. I used to track that on a bi-weekly and a monthly basis. I would sit down and track how my net worth was changing, how my investments were changing. If you do it too often, what I can find is it's not very helpful. You're like too hyper focused on the changes in your net worth, because net worth doesn't move in a straight line. Like you'll have down days, up days. It kind of moves more like a stock chart, right? You'll have days where things aren't going as well, days where valuations aren't as good on your portfolios, et cetera, and so forth. So you want to zoom out and say, is the general direction going where I want it to be? Are there the fruits of these investments yielding something? In times of recession, obviously you're gonna have losses to your net worth. Don't let that stop you. Focus on the process. Focus on, am I making the right strides to build out where I want to go? And am I gaining more units? Those are like certain metrics you can look at to help track your net worth over time. But I just use a Google Sheet. I used to use Microsoft Excel. Then they started charging for Microsoft. I used to have like a ripped copy. My friend put on my computer, and then I changed laptops and just was like, I'm not gonna go through the effort to get Microsoft again. So I just switched to Google Sheets. It's free. I imported all my sheets on there, and it's been great. It's real time. I can open it on my phone and track it whenever I want, if I'm on vacation, whatever. So big fan of the Google Sheets. Tristan says, how come you're leaving Canada in the summertime? It's the best time in Canada. Well, Tristan, I couldn't control when this flip would fall into my lap. Of course, if I had complete control, I would not be going in August to Florida. That said, I have friends down there now. I have a community down there. We'll still go boating, have fun. Like there'll be things I'll be doing while I'm working that are fun. So yes, you're right. I would much rather be in Canada in August, 100%. But this is one of those things where I was actually the second mortgage holder on this, and it went into foreclosure, and I had to save the deal. I've been through 5 foreclosures now. 5 guys that I know who are going through foreclosure. So there's a lot of folks I'm hearing about going into bankruptcy and foreclosure in the real estate space. Most of the developers, most of the flippers, any of the guys who didn't have like large cash reserves to cover the losses. Like I had some losses too. Some properties don't sell for what you want them to in a recession. You have to have cash contingencies. And these people were fully levered up to their eyeballs and didn't have any contingencies. And so of course they're gonna get wiped out and sort of bankrupted. So again, like sometimes I still value money more than I value my freedom. And so I'm gonna try to align the two so that like I can make the road trip to Florida and the time in Florida fun. I mean, I'm staying in an 8,000 square foot mansion with an elevator. There's worse ways I could spend my August in West Palm Beach, Florida. It's not really like hardship. Like, flipping that property is not going to be that bad. There are a lot of positives, and I think most people would look at that as a vacation, as an opportunity. I'm going to treat it as such, but it is a business trip for me, and it's tax deductible and it's work. But yeah, would I rather be in Canada flipping a house here instead? For sure I would. But again, like I can't control when foreclosure has happened. Can't control when I have to step in and take things over. It just is what it is. Lots of people are struggling. There's lots of deals right now. And yeah, I mean, I think it might get a little worse before it gets better, but it will eventually get better in the real estate space. So yeah, stay tuned for watching how all of these dominoes fall. I'm watching all the people around me who are investors and my competition and my peers, and just seeing how the landscape is changing. And I think there's lots of opportunity right now for those who are hungry. So most people are on vacation in August. I'm gonna be going hard and vacation at the same time. Mostly working hard. Grinder says, hey, Mike, hope you're well. How do you save money early in your journey with 3 kids? Well, I didn't have 3 kids early in my journey, but I do now have 3 kids. It's, it comes down to just being able to budget and saying, hey, this is what we have for spending. Kids don't need to cost that much. Like if you're making a meal, to make extra of said meal, it's a few $100. Honestly, in Canada, Canadian government, if you can get your income down, if you can store all your income inside of corporations and keep your personal income low, You get Canada Child Benefit, which is like $600 cash per child per month, tax-free cash deposit in your account. So 3 kids is $2,200 with the Ontario and the Canada Child Benefit. So Canada literally pays you to have kids. If you can get a corporation, or you can buy some rental properties that like you use the deductions and operating expenditures when you're turning the assets over and creating capital gains for the future, you're creating losses that offset your day job. So if you're good, I always say this, like people say, like, what's the secret to not paying tax, Mike? I'm like, buy more properties, buy the right kinds of properties that need work. Then you get tax deductions. You can offset all of your day job. There's like, for like 5 years, there's like almost no tax I had to pay. And I now have to pay almost no tax in Canada at all. Because as I'm acquiring properties, I'm creating a ton of deductions. And so that offsets any income that I make. So on paper, I don't make anything. I had a couple of years where it was unavoidable. Like 2 years back, I sold a bunch of properties in 2022. We had like a $2 million capital gain or something. So there was nothing we could do about that. Like I had to pay tax on that. But capital gains were preferred. They were half tax free. They still are preferred. It's still a better way to earn income than earned income. Earned business income is taxed at the full marginal tax bracket. Capital gains are now from 50% to 66.67% times your marginal tax bracket. So your marginal tax bracket is, say, 40%. Most people, like the average MTR is like 35% or something in Canada for the average upper cost person. So like 36%, whatever, is the average MTR. 36% times 66% means you're paying an effective like 30%, 28% tax on all capital gains earned income. So you earn 100 grand through a capital gain. Also, the first 250,000 per spouse per person is also still taxed at the old 50% inclusion rate, meaning half of it is not included. A 50% inclusion capital gains means that half of your capital gain is fully tax-free in Canada. Anyway, so how do you save money with kids? Earn more money and enjoy keeping your personal income real low. Keep it all inside of corporations. Defer it by investing in businesses, investing in properties, creating depreciation and expenses, and then collect that government money. If you can keep your income below $30,000 personally, there are dentists, doctors making $300,000-$400,000 in the corporations, collecting $650 cash a month per child from the Canadian government because they have kids. So for the first year ever, I've always had high income, but my daughter's almost 9 this year, and I should have been getting more, but I had such high income personally for trying to qualify for mortgages and stuff. I'm gonna get better at it now. I've now set it up so that this year, I just started like last month getting the Canada Child Benefit. It's $2,200 a month cash. Cash money. So how do I save for my kids? I mean, the government pays me to have kids in Canada. It's amazing. In the US, you get nothing for having kids. In comparison to Canada, Canada's great. People talk shit about Canada. Everyone's like divesting in Canada and going to the US. Canada has a lot of really great things going for it too. Our financing system is way better here. Way better. Like commercial financing in the US for a commercial building is like a 15, 20-year amortization at like 8%. Here in Canada, you have CMHC, government-funded financing, government-insured multifamily, where you put 5% down on a 50-year amortization at prime -3. You can borrow in Canada right now like 3.99 for like a $10 million building, 5% down. You don't get any good financing like that in the US for larger multifamily. So Canada's way, like our residential housing market is way propped up on cheap debt, which makes it attractive, I think, in a lot of ways that the US isn't attractive if you're in the large multifamily space. Gallardo says, did you get a new minivan? I did. I have a 2023 Honda Odyssey is what I got. And it's great, leather seats, heated. It's a beautiful car. We really enjoy it. We were looking at going new. It just didn't make sense to get new, and we could get a used one that was like a year old, and I got a super deal on it. I got like 50% off the new price. So I'm pretty proud of myself. Not 50, maybe 40% off the new price. I hunted for a good deal. So yeah. Mr. Earl says, hey, Mike, did you get in touch with the owner of property? Would you get their number from City? Okay, so how do you get in touch? Is what there should be a how there. I filled in the blanks for you. So Mr. Earl, you would, if you're trying to get a hold of someone, there are ways to look up, like if they have a corporation, you can go look up who the directors of the corporation are and what the listed number for the company is. In Ontario, you can do that. In the US, it's a lot easier to track all that data. But in Canada, there's a lot of privacy laws that make it hard to find people's numbers. It used to be, you go in the phone book and you could just look that person up and see what their number was, call them, right? Now everyone has a cell phone. A lot of the numbers aren't published anywhere. It's hard to find them. So you can find them, but they're difficult to find. You got to reverse look things up. It is challenging. A lot of the ways that I get like contact directly with the owner is like I go knock on the tenant's door and say, hey, can you get me the owner's number? Is like the way that I hunt it down. Unless I can go on Google and find their number, but yeah, difficult to find their number. You can probably go through City Hall and get some sort of contact listed. But the owner isn't always listed. Sometimes the property manager is listed as the person who's managing the property, and so you don't always get contact directly. You have to go through the property manager to then find the owner. So yeah. Hey Mike, do you think putting a lump sum into the S&P 500 is currently a good idea? I currently don't think it's a great idea, but again, over the long term, it will be a good idea. I think there's a lot of risk. If you're going to throw your money in the S&P 500, please buy some hedges, buy some puts, sell some calls on that same position to protect yourself against a down cycle. I think it's very possible the S&P 500 pulls back 20% in the next 2 years. We have a big correction. I don't know if it's going to happen. It's hard to time the market. There's a lot of risk there. We ran up really high, really fast. And so what that means is when we fall, we can also fall really fast. So there's a lot of risk there. Again, they say over the long term, indexes always go up 7-8%. The NASDAQ's up 100% in 2 years. So it's done 20 years of growth in such a short amount of time, or maybe 10 years of growth in such a short amount of time, that I think that it's probably ahead of schedule. And if we had a pullback, we would still be on our 7% compounded annual growth rate. So over time, it will return to the mean, so to speak, meaning that we will have down years that will balance out these crazy frothy years we're having now. And I don't know what those look like. It could keep going like it has. We've been on a crazy bull run tear. I mean, again, NASDAQ is like double almost. S&P 500 is ripping this year too, just despite all of the economic news, despite what's going on for the bottom half of society. Like the bottom half of society is poorer than they've ever been. Inflation's run like 20% in 4 years. More than that. I mean, the buying power has gone like 1/4. Like if you had $4 in the bank 4 years ago, one of them is gone just to inflation. Like that's the devaluing of our currency is insane the last few years. Just unreal. So, you know, at the same time, I would never leave things in cash, right? So where do you put it? You got to spread it around to things you think are going to have good value. I think, you know, spreading it around to multiple different places is smart. I don't know. How do you deal with black mold? Planning to DIY. So black mold's a challenge, right? It's like depends on where you have the mold. So if it's like a shower issue or a plumbing issue, obviously get to the root cause of the problem first off. Where is it coming from? The roof? Is it a leak? Is it a pipe stripping? Is it whatever it is? Solve the root first. Then of course, like dehumidifiers are super important. Air circulation is super important. Dehumidifiers, keeping your humidity below 35%, your relative humidity in the room, will ensure black mold can't spread. It can't grow in a non-humid environment. So if you can dry it out, that will stop the progress of the mold spores entirely. So stop the leak, dry things out, remediate and remove. Using things like vinegar is a great way to naturally do it. But there's good products called like Concrobium is a good one you can spray on it that'll kill mold on contact. But yeah, it's people get scared of mold and it is a dangerous thing. It's like as bad as smoking apparently, but it is solvable. Tristan says, what do you have to do to save the deal? I'll have to go in and renovate the whole thing. Do some cosmetic fix-ups. Sammy says, July inflation data just came out. Interest rates are forecast to drop for the rest of the year and into the spring. Do you think we'll see 3% interest rates this year this time next year? Yes. Definitely, I do think we're trending towards some cuts in September, more cuts in Canada. I'm excited to see the teaser rates in, let's say, 6 months in the spring. Like we're going to see some March, April, May, June, springtime promotions from mortgage brokers, I think at like 3.99 in Canada, 3.79. I think we'll start seeing those. And in the threes again, everything starts to cash flow. It all pencils because rents have gone way up, prices have come down. So what that's going to do when rates fall is shoot prices up. I'm extremely bullish the next 2-3 years on real estate. This is not the time to sell. It is the time to buy. That's my opinion. Hey, Mike Kwan from Sarnia, thank you for being in our lives. What are some tips and advice for getting CMHC loans? Well, you're going to talk to a mortgage broker about the hoops you have to jump through to see if the property will qualify. Certain properties don't qualify for the CMHC financing. There are certain hoops you have to jump through in terms of like, environmental points. There are things you can jump through in terms of like providing affordable housing. There's some subsidies for that. That's the less nice one to go through, again, because you have to obviously force below market rents. That makes no sense. Someone said they had black mold in their windows and doors. Very common. Windows and doors, you got hot versus cold. So you can get humidity whenever things are hot versus cold. and that would create moisture, and then the moisture will sit there. And if you have moisture that sits in a place, mold happens. Mold loves wet, warm environments, and like especially wet environments. And so, of course, if there's moisture there, you're going to have mold. Tristan says, how often do you have to step in and take over deals when you're on the mortgage? So when I'm first mortgage, rarely. I've had to do one foreclosure ever on a first mortgage, and I got back 98% of my invested capital. So as a general rule, like these were all mortgages I lent out in 2022. These are all deals that are coming sour now. And that was a learning point I started talking about in 2023. I really shared about how you shouldn't be doing second mortgage deals. In 2022, the world was a different place. I didn't expect things to get as bad as they did. And so, of course, like I made some mistakes. By lending in second position, I didn't factor in that prices could fall 20, 30%. I did, but I didn't factor in that all of these defaults would happen at once. I didn't factor in how long the court process would take to take the property. And that costs a lot of time. And time is money, right? So those are things I didn't think about when I was doing it. Well, I probably wasn't as conservative. Like I trusted the people, and I shouldn't have. I should have been more conservative in my valuation. I would never do a second mortgage above 50% loan to value. I would never do a first mortgage above 75% loan to value, unless it's right now. Like if you're lending in a recession, you can go 80% loan to value and you're safe. But if you're lending in a bull market, that's when when prices were at their all-time highs in 2022. Everything was as frothy as it could be. We were appreciating at 2% a month consistently for years. Like it was just compounding like crazy. And we were overdue for a correction. And so in that environment in 2022, 60%, 65% maximum first mortgage loan to value was the way to go. However, now prices are down and they're going to be on their way up again. We're near rock bottom. So now lending at 80% loan to value is like lending at 60% loan to value 2 years ago. So look at your economic environment. Don't, just because they're your friend, just because you know them and like you have a friendly relationship doesn't mean you should be lending in that way. I crossed the lines, lent friends, lent family, did deals with family. Maybe it's because I was doing so well successfully. I wanted to share in that wealth with people and help other people. And I took my eye off risk management, and that's my bad. So yeah, definitely don't do that. Learn from where I failed. But in general, in a bull market, never do you ever have to step in, like very rarely. But in a bear market like we're in now in Ontario and in Canada, you step in a lot more often. Is declining birth rate propped up by immigration? Could this affect real estate long term? I would say, we have an immigration crisis here in Ontario and Canada. And I have to be careful how I say this, but like in some ways it's a crisis. We literally don't have the infrastructure to support the amount of people that are coming in. Canada had 1 million people immigrate to it last year, and our population is 40 million. So 2.5% of our entire population is freshly landed here. Our compounded growth rate from immigration is intense. Bringing in like 2-3% of your population every year in fresh people is a lot by most standards. But so it's good for real estate in the long term. In the short term, there are definitely infrastructure challenges. There are tons of challenges with bringing all these people in, and we're actually in a bit of a baby boom right now. Like I think there's a number of like folks having babies that weren't before, especially post COVID. So there's a little bit of an uptick actually in birth rate, which is again bullish for real estate. But I think that Canada is like, specifically Canada is like the most fertile land. Like we have such a great country with so much natural resources. We have a huge land mass, and as global warming or just temperature cycles, whatever you want to call it, as things get warmer, Canada gets even better because a lot of our land is cold. And now that it's getting warmer everywhere, a lot of our land is really great and tropical. And so Canada's going to be, I'm extremely bullish on Canada. We have the worst management possible. Some of the terrible policy decisions, like our finance minister is a joke. 0 qualifications. Our prime minister is a joke, like a drama teacher, a failed drama teacher with no qualifications. The first ever prime minister in Canadian history didn't have either a master's in law or a master's in economics or both. Every single prime minister in the history of Canada before him had a master's in economics or a master's in law, understood how to write law. He understands how to look good and get the vote. That was it. Legalize weed, make some policies that placated to the 51%. to get his vote. So anyway, economic wise, policy decision wise, in a lot of areas, I don't like what he's done. I could care less about the marijuana being legal thing. Like, it's like drinking. It's whatever. It's like pick your poison. People could do what they want with their life. I don't even care about restricting that really, to the extent that like they're going to do it anyway. So I don't know. These things weren't voting issues for me. The economy was a voting issue, and he's expanded government's purview and just government staffing by 100%. Literally, the staffing under Trudeau has doubled. The number of government employees is now like, yeah, I read a stat, like 15% of all Canadians are employed by the Canadian government. Like, what? It's like this massive public sector that was like 6%, now it's like 15. Like, we've become just this bloated, living off the tax system. It's not great. It's not great for Canada's future, but I think that Canada will turn around. The pendulum always swings the other way. I'm sure we'll swing conservative in the next election, and they'll reverse a lot of the policies. And so we end up staying somewhere in the middle usually. And so anyway, bullish on Canada, like Canada a lot. We'll continue to invest in Canada. I also like the tax havens of the Bahamas. And I think eventually I'll end up somewhere like the Bahamas long term when I retire. I don't see myself being in Canada forever, but I love Canada in the summers, and I will continue to visit Canada for the rest of my life, hopefully. How much work was it having to deal with police? We've had challenges. We've had tons of challenges in Florida. Our managers are like, I have a full-time manager there. They're amazing. I have good handymen, good cleaners. We have good staff, good people. So it largely didn't affect me. I wasn't actively managing the different challenges, but for sure we've had some challenges in the hospitality space. Almost a death, sexual assault cases, because prostitutes book rooms and they get up to crazy shenanigans and drug issues and assault, tons of assaults. That kind of stuff just happens in the business. Like, it's just part of owning real estate. If you haven't had someone die on your property, if you haven't had someone, abused in your property, you're just an amateur investor. I mean, over time, you'll have all of that happen. Fires in your properties, floods, all of that will eventually happen to your properties at some point. Just part of the game. Build it into your numbers. Hope you don't have it happen, because it's unlucky when it does and it creates losses. But it's life. I mean, nothing's perfect. I mean, there's probably some investor out there who's just lucky and never had any of that happen. But for the most part, that stuff does happen, especially in the B quality real estate. The cash flow is the best. Where the good cash flow is, there's a lot of problems. Where the shitty cash flow is, like your 3-cap property in LA with like your most elite tenant, single family, you won't have those issues, but you won't have any good return either. So there's, when you take risks on, you get a higher return for that. What would you do with your time or life if you hit $1 billion net worth? What provides meaning in your life beyond real estate, business, investing? A lot of what I would do would be like philanthropic type ventures. Like I actually like helping other people achieve this. So I would probably spend a lot of money building out some sort of like program, I guess, that was free, that would help people to unlock financial independence. I want to help people invest in real estate. I specifically want to focus on people who want to help themselves. So I would some sort of entrepreneur program where I like people who are like me, who wanted to do what I did, help them get there. Like, I wish there was someone that could have been there to mentor me through the early steps. That mentorship would have been so great. I didn't have any of that, and I wished I did. Even just having like, some people don't have good parents, so just having like someone to step in and be that for someone who wants to be better, it would be really cool. But I'm nowhere near $1 billion, so I got to keep going. I'm a long way away from what I would call like the billionaire success level. CM says, how vertically integrated is your real estate business? For instance, do you own a construction company and property management? We do. So depends on which vertical. Like the hotels have to be run with your own cleaner and your own manager. If you were to outsource it to property management and outsource it to like a cleaning company, you'd be bankrupt. The Airbnb arbitrage guys, if you were to like let them come in and run your business and take all your revenue, you would have no money. So you got to deal with the shit, which means you got to have your own systems. And then in terms of like construction companies, for the most part, we bring in hourly guys, subcontractors who work for us and do the work, just because the cost to go with like a general contractor is really expensive. It's cheaper to hire a project manager and pay them $30 an hour and then have them bring in sub trades than it is to go hire a company that's going to bill you $100 an hour to have their staff sit there. And it's just not as efficient, to be honest. So yes, I definitely vertically integrate. Every time I acquire properties, I have to put in place staff to deal with those issues. And so there's definitely vertical integration. There's synergy all along the way, right? Like, I sometimes wholesale. I have a real estate business. I do the flipping. I do the construction. We have like obviously in-house property management is essential. Not always, but like I have a random property in like Lake City right now. I'm trying to sell. I can't put vertical integration in that because there's no staff there for one property. That makes no sense. I should divest of that property. My cottages, I should divest of those too because they don't fit into the vertical integration. So even just like as a consultant looking into my own portfolio and using this reflective exercise, I should be disposing of properties that don't fit the vertical integration model where like I can have the lending business that can sustain the real estate business and being in real estate is helpful too. I can sell properties for 0.5% or nothing in some cases. So all of the vertical integration for sure leads to increased efficiency. It's true. And to some extent, you have to do that. Like if you outsource everything in your business, you'll have no edge. And what's the point in investing in real estate without an edge? So, yeah, good point. When getting started in real estate, though, did you save all money on first property or did you save some capital in paper assets? What do you recommend? So, my first property, I saved up paper assets, stocks, all that kind of stuff until I had enough money to buy the property. So I saved up 20% down. My second property, same thing, saved that 20% down. The third property, I refinanced the second to buy it. And then the third property, I refinanced to buy the fourth and fifth. So I was dumping my paychecks. All the money I had was going to renovations on those properties at that point to snowball it, right? So I had literally no paper assets. For a long time, I was 100% in real estate, reinvesting into the business, like constantly focused on trying to carry these properties, turn them around, refinance them, take the capital out, buy another one. So for a time, when I reached millionaire status, people were like, what was it like being a millionaire? And it was like, I couldn't even afford groceries. Are you kidding me? I had like $5 in my account. The first time I was a millionaire, I had no cash at all. I had like, I think 11 or 12 properties or something at the time when I first run over a millionaire. Even my second million on paper. I was on paper wealthy, but I had no cash. Like I was like ass to mouth. Next paycheck, when the rent came out on the first, it went all out to the different bills. Like I was on a line of credit, just barely hanging on as I was trying to grow the portfolio. It was absorbing all of any cash that we had. I deployed everything and went all in to grow quickly. And so that's just the nature of anyone, any entrepreneur who has grown aggressively has been through that phase. And so people say, well, what's it like being an entrepreneur? I'm like, well, it's like being poor. You know that feeling when you have no money? That's the feeling of being an entrepreneur in real estate when you're getting started. And eventually you sell properties, build up a cushion of cash, and then you're not poor. Like I now I'm not like that in the same way that I was then, but like, yeah, I mean, that's a good real estate investor is fully deployed and they're living on the edge. That's how you grow quickly. And so, yeah, I mean, obviously I have some reserves, have some lines of credits and stuff in case an emergency pops up, but you're pretty much broke as in the growth phase of any entrepreneurial venture. And real estate is no different. Do you not get others to manage rental properties for you? Of course, of course. There are a few situations where I will manage a property if I plan to sell it, or I need to like specifically keep my eye on something because for a certain reason, there might be a problem tenant that I know a property manager won't give a shit about. So I'm gonna have to like Sauron laser focus on something for a minute, and then I'll like basically I laser focus on thing, then I go to the next thing, the next thing, the next thing. That's all you can do. It's just one thing at a time. So my attention diverts based on where I'm needed the most in the business. But of course, I try to set it up where I can walk, like I'll stabilize a hotel, put someone in place, staff, all of that. I'm laser focused on getting that operation set up. Once it's moving, then I'm just checking in. We're doing like a weekly touch base or even a daily touch base for a few minutes with the people running it. So yes, definitely you need to get people in place to run your properties. You don't want to be running it all yourself. But in the beginning, you have to run it yourself. You have to learn the business to understand it. You have to work in the hotels. You have to work in the property management. You have to work in the construction. To understand how to hire people for the role, you have to understand what they do in the role. So you have to do it. And so people who come to me are like, they're neck up. And they're like, I don't want to ever like get involved in my properties. I'm like, well, you're probably not going to scale. Maybe you will, but like chances are you're going to have challenges because you need to be in that business, I think, to have the most success. So I guess you could do it. You just wouldn't have as good of an ROI. Your ROI would be less, but I mean, you can still do it. It's just lower ROI means higher risk. One of the ways that I risk manage so well is that I'm dumping so much time into my business. That's how I manage risk in large part. Next question was, can you suggest to learn how to tax savings? a person or book. Honestly, like so I went to school for finance. I went to the Rich Ivy School of Business. It's the top business school in Canada, and I took a CA major. Back then, there was three streams. I'm dating myself. Isn't that crazy? I'm aging myself now. There was a CA, um, CMA, and CGA path. I took the CA path. I worked at KPMG for an internship, and so I had some real world experience in accounting, working for a big four accounting firm for a bit. I got an offer to work there full time. I ended up quitting right as I was about to start full time with them and went into consulting instead for 3 years. And that was a more aggressive career path. I made more money. I was able to grow my real estate portfolio faster before I quit and went into real estate full time. But yeah, I mean, it's one of those things where, um, it's one of those things where just time. Like, where would I read it? Googling, like through experience, was like, how does a rental property work? Talk to an accountant, hire an accountant, learn from them. You know, there are some good websites. I'm just trying to think. Like Google is where I just get to these places to read about it through Google. I'm not necessarily an expert by any means. I'm not a CA. I never finished the path. Didn't get all the work experience done. So take whatever I say with a grain of salt. Talk to your own accountants. Tristan says, is Bahamas still in your plans or further into the future? It is still in my plans for sure. It's just that I have these large losses from the stock portfolio that I can carry forward into the future. And also like Canada's child benefit plan is pretty epic. So for the now, I'm going to stay in Canada until my kids are a bit older. I'll still spend my winters in Florida, but primarily be in Canada. So, yeah. Have you watched Michael Saylor's 2024 keynote? Bits and pieces. I've seen bits and pieces of it. He's a maximist. He's a maxi bull on Bitcoin. Juan says, let's build the program you mentioned. I would love to learn how to achieve financial independence. Yeah, I mean, there's definitely, it's on my list of things to do. I need to build up my real estate portfolio first, achieve those goals, and then, focus in on this again. It's just that, I have some lofty financial goals I have to hit first in terms of the real estate business. But yeah, through all the questions, awesome. Thank you everyone for tuning in tonight. Obviously, I appreciate you. Hit the thumbs up button. If you're enjoying this, share it around. If you're having fun, jump in the comments after and you say, hey, Mike, I had fun on the stream. Thank you for the content. Anything like that. It's all helpful. I appreciate all of it. Of course, the secret to unlocking wealth through you is 3 levers and control your financial future. Spend less, earn more, and maximize the trends and the difference. Have a good night, everyone, and we'll see you next week. Hopefully from Florida next week. Give you a little tour of the mansion. Good night.